traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Monday night for Tuesday's trading. That's 08/11/09. Traders, a couple of things we're going to talk about in this video. One, flat tops produce market drops. I have a couple of examples I'd like to show you. We have a flat top in the NASDAQ. Indicators are just screaming for a short. Traders, you know, in the overall picture, in the larger scheme of things, I am a buyer of dips. I need big dips. But as an analyst, I cannot trade my opinion. I have to trade what I see. And on the charts, the formation is a flat top, and now the indicators are pointing lower. Indicators pointing down, formation pointing down. Even if it goes up, I have to sell first tomorrow if I am to stay true to my analysis and not allow an opinion to cloud my judgment. Now, I always tell you that. I take my trades directly off the charts. I don't care what the news says. Yes, I read the news. Yes, I present some of it to you so that you have a clear picture of what the street thinks, but I only trade what the charts say. We are short-term traders. We were buyers of dips on Monday, although we never really had much of an opportunity to do that. We are now a seller for tomorrow, for Tuesday. But because in the larger scheme of things, we are buyers of dips, when I sell, I'm going to be quick to get out and then stand on the sidelines. So do your homework and see if you don't see it that way. I do. See if your charts look that way. Traders, another thing that we're going to discuss, the two-day rule is in effect in the soybean market. We've been we've been wildly bullish soybeans, but we had down day one right here. This one down day, as you can see, this represents possibly a soybean or any market that's bullish. Up, 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 up. Then you have a big down day, usually followed by a second down day, the two-day rule. And after the second down day is over, and usually it's a big down day, then maybe you can start thinking about the turnaround and the buy for the straight back up. For now, though, we are going to look at soybeans as if day one does exist. We seen it on Monday. Day two didn't fill in yet, but we're expecting day two to fill in so that we have our two-day rule, and then maybe it'll turn around and go higher. So we are going to look to short the soybeans, and basically no choice. Once you see the analysis I'm about to show you, we basically have no choice here but to short the U.S. indices, at least on the onset tomorrow, and then we'll see what develops. With that in mind, traders, let's go look at some charts. Okay, traders, the first thing on our board today was flat tops produce market drops. What you are looking at right now is an example of that. This is a clip out of the Dow Jones Industrial Average chart from 2009. And just to show you that flat tops do produce market drops, you have a flat top here, market drops. The next flat top we see, you get a little market drop. We are day traders. We're not looking for a massive drop. We're looking for a day pullback. Another flat top ensues a market drop. Now, I'm going to show you a NASDAQ chart because that is live right up till the moment, like right here. And I think you're going to see the same sort of thing. Flat tops produce market drops. Now, we have a flat top in the NASDAQ and indicators pointing lower. So it's not that I can go with formation over indicators or indicators over formations. I must choose the direction. It's pointing lower. So let's go look at that. I'm going to rip right through these charts. I'm not going to wait. I'm just going to rip them off, traders. A little bit crude here, but I want you to see the examples. Let's go. All right. NASDAQ right here. NASDAQ September daily bar has a flat top. Undoubtedly, nothing else you can call that, right? So there is a flat top. It's a pretty decent sized one. And it augurs for us to start to drop down a little bit. Now, hey, two big down days, I'd love to see that. Two big down days in a bull market, and then you can get long, especially if we come down and hit the bottom of this trend channel. However, we will take this one day at a time. We are expecting the market to take out the stops below here tomorrow and drop lower. Again, traders, the long-term view, even the intermediate-term view, I am a buyer of dips, but there have been no dips here lately. So I am looking to buy the dip once it happens, But being that so many indicators are bearish and the formation is starting to look bearish, I am going to sell into this, let it come down a little, and jump out. Because I am a buyer of dips in the larger picture, in a larger sense, in a, let's say, a weekly time frame, I would be very nimble with my shorts. I'm going to get short, I'm going to get profitable, possibly, and then I'm jumping out if that comes my way, because I don't want to be stuck with shorts in what looks to be a bull market. Again, you must trade the indicators and the formations if they're both pointing in the same direction. And what I mean by that is, this is the daily bar chart, right? Let's look at some indicators here. This indicator is the NASDAQ Commodity Channel Index, traders. Clearly, it has broken and is pointing lower. The CCI on the NASDAQ has finally broken down and is pointing lower. So now you have one indicator. Let's look at more here. Next indicator is RSI, or Relative Strength Index on the NASDAQ. Again, clearly pointing lower. As you can see, it went up a little, starting to head down. It's now below its 70 line, and that is usually an indication that it will do one of these numbers and come down. So the chart formation looks bearish. The indicators are beginning to look bearish. You've seen two. Let's look at a couple of more here. Next indicator you're about to see is slow stochastics, traders. This is the slow stochastic on the NASDAQ. It as well is pointing lower. So now I think you're starting to see the picture. You have the flat top on the daily bar chart. You have indicators pointing lower. Any analyst who can do analysis and keep his opinion out of it would have to sell that. And that's what we're going to do tomorrow at the Omni Trading Academy. Let's look at one more indicator here on the NASDAQ. Okay, traders, this is Directional Movement Indicator, or DMI, on the NASDAQ. When the green or positive DMI is pointing lower and the red or negative is pointing higher, that is usually a very bearish look. But in this case, the red's actually pointing down with the green. It's not overly bearish, but it does augur for a drop coming tomorrow. Maybe a 2-day drop, maybe a 1-day drop. I don't know for sure what we'll get, but it doesn't look like we want to be long this thing. Now again, you have to feed a bull in order to keep it running, and tomorrow's report at 8:30 could easily just, boom, take this thing right up and forget about any 2-day drops. And as you know, the larger picture, that's what we would expect to happen. But again, I'll repeat, when your indicators are pointing lower and your formation is pointing lower, you don't have a choice unless you're going to go against your analysis. You got to go with the short side, and that's what we're going to do. Now I'd like to show you the soybean charts, traders, and the 2-day rule. Okay, now I showed you the 2-day rule on the whiteboard just a moment ago, and here it is. Look at this big down day in the soybeans after having massive up days. Then it put in this flag, and clearly that does look like a bullish flag and will probably end up higher at some point this week. But you've had down day 1 in a bull market. The 2-day rule suggests that you're supposed to get one more down day before the turnaround. So we are going to try to play for that down day. Of course, our stops will be in case it does turn around and go straight up. But traders, the US dollar index has had a couple of days up now, and it looks like it's going to have another up day. And if it does, beans will almost have no choice but to go down. So when you look at the whole picture, it does sort of make sense that we have to take a short in soybeans as well. Now, the chart indication is that we're going to drop, right? The formation says, yes, there was a bull flag. However, you had a big down day. That means the 2-day rule starts to come into effect. We expect this day, which does not exist yet, to happen tomorrow. And then we will look at indicators, right? Well, if you have the formation pointing down and your indicators are pointing down, like the NASDAQ and the indices, you have to sell it. Well, look at these indicators right here. This is the CCI on soybeans. Clearly, that is pointing lower right now. So, Commodity Channel Index on beans pointing lower. Relative Strength Index on soybeans, absolutely no doubt about it. That is pointing south. Next, we are going to look at stochastics on the beans. Look at the stochastics. Crossed over right here as of Monday's close. That is starting to look bearish itself. And then, of course, we have the DMI, Directional Movement Indicator. The most powerful days in any direction of this indicator is the first instance where the green crosses the red. they are just touching each other. They're pointed at each other right now, just like this, and the green is about to cross and the red is about to cross going up. That usually gives you your most powerful day of this given move, and this move looks like it wants to go down. So if the green continues this way and the red continues that way tomorrow, you should have a pretty powerful down day, at least the first half of the day in soybeans. Traders, pull your charts on beans and the U.S. indices. Pull your indicators and make sure you are reading them correctly. If you think you are not, please come down to www.livewithoscar.com. Jump into our chat room / classrooms and allow us to teach you what this says and how to gauge the analysis. So, traders, you see those charts? You see the indicators? Again, traders, if you are a pure analyst and keep your opinion out of your analysis, which you should always do, you have no choice but to go with shorts in the indices and the soybeans tomorrow. Even if it gets stopped out, that's what stops are for. You must stay true to analysis, because this isn't about today, and it's not just about tomorrow. It's about how you have performed over a long period of time. If you stick to certain rules, if you stick to what the analysis says, if you do not stuff your opinion into that analysis, you will find that over time, you will be much more consistent than you will be a loser. You will be calling your trades better if you stick to your rules and adhere to the analysis. And that's what we do here at the Emini Trading Academy, and we will certainly teach you how to do that if you come on down and visit us. All right, traders, this is not a weekend webinar, so I will not stand here much longer. Guys, anything I need to say before I skedaddle? If you like these YouTube videos and you would like to subscribe to them, it's very simple, traders. Boom, click the subscribe button and subscribe to our videos. This way, every time we put out a YouTube video, you will be notified if your YouTube is up. We now have over 430 YouTube videos, a lot like this one for you to choose from and to learn from. We have another 127 videos that are more interactive that were done at the site as we were teaching classes. Those are stored in our Emini On Demand here at the site. So we have a lot of videos and a lot of learning for you to do, a lot of education for you guys, gals, you traders out there. So please come on down to the site and take advantage of what we have for you. All right, traders, I'm not going to stick around in this video. Remember this, a stop is your best friend. Do not fall in love with the downside in the indices. Traders, expecting a pullback 1-2 days down, fine, I can live with that. Don't fall in love with the downside, because as you may have noticed in these last few weeks, when news comes out, it seems to be bullish, even if it's not bullish news. That means you have a market that is turning. It looks like we have turned, and it looks like you are a buyer of pullbacks on the larger picture, and if you have to be a seller in between, you do it, but nimble. Get short, get out, be done with the short side. That's how we're going to play this thing tomorrow. All right, traders, give me a buzz anytime down tonight, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do is to repeat this over and over and over. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.